Alright friends, கொரோனா ஓட தாக்கத்தில் நம்ம ஒரு புதுமையான முயற்சி பண்ணுறோம் ஆக்சுவலாக. ஸோ நேராக தான் வர முடியாது, இப்படி கான்டாக்ட் பண்ணாலாம் அவங்க கொரோனா போகாதில்லை. ஸோ அதனால் என்ன பண்ணுறோன்னா நம்ம இந்த அமளித்து மொழிலாம் ஆடுற வரைக்கும் we'll just have some recorded classes. We'll also try some live classes if you want. So first இன்னைக்கு நம்ம we'll go to the very important chapter in income tax from the point of view of examination, from the ERI point of view. Pgbp or profits and gains from business operation. Sections 28 to 44D deals with business income. Section 28 is a charging section. Section 29 deals with how to compute the business income. 30 to 36 deals with specific deductions. 37(1) deals with general deduction. Section 38, Section 40, 40A, 40B, 40 capital A, so 43B, all of them deal with disallowances in computing the business income. So then Section 43 deals with definitions. Section 44 is very peculiar to business income, because in business income there is a requirement to maintain books of accounts. So the provisions relating to books of accounts, tax audit, presumptive income are there in Section 44 series. With this brief prelude, I will go to the chapter. So today we will focus on specific deductions. When we talk about deductions in computing business income, we can divide deductions into three types. So deductions which are going to be available to the extent of 100%, deductions which are available more than 100%, we can call it as weight deduction. For the current assessment year, one advantage is all weight deductions have the same percentage of 150%. So therefore it's very easy to remember to that extent. All weight deductions are 150%, and then you have a last set of deductions where you have to claim the deductions over a period of time. So those are the three types of deductions. Let's move to the first of the deduction, Section 30 of the Income Tax Act. Now Section 30 deals with rent, rates, repairs and insurance in respect of building used for the purpose of business. So as you can see from this slide, you can divide the section into two parts. If the buildings are occupied by the assessee as the owner, and if the buildings are occupied by the assessee as a tenant. Now if he occupies the building as the owner, as you can find, you can claim deduction for current repairs, whereas when you come to this side you will find all repairs. So therefore the word current is missing when it comes to question of tenant occupied the premises. So otherwise you will have no difference between the two. The word current is the only difference. So what is a current repairs? Is the repairs which you have to incur every year. So as and when you have to incur the expenditure, if you incur, it's going to be called as current repairs. If you ignore the repairs and then incur over a period of time, so normally typically take a CA student. Sometimes when when I ask them to drop in my house in the two-wheeler, the sound of the two-wheeler will be shocking. If I ask them why, maintain body is something maintain, we are not maintaining the vehicle. So will come back and say, sir, where is the time? I'm going for classes, office, no time to service the vehicle. So one fine morning when you go to the mechanic and give the vehicle, body is super maintain, vehicle maintain, you will put, this is accumulated repairs, not current repairs. Can you claim deduction that under Section 30 or 31? The answer is no. But can you claim under 37(1)? The answer is still yes. Therefore, though current repairs alone are allowed in 30 and 31, accumulated repairs still you can claim under general deduction. So that's about Section 30. So to that extent also you can understand and appreciate one point. So even if you do not know Section 30, you can manage Section 30 in the examination, because even if Section 30 is absent, the deduction can still be claimed under Section 37(1) of the Income Tax Act. So therefore to that extent you don't have to pay some serious attention to sections like this. So let's move on to Section 31 on this basis. A quick move to the next Section 31. So as you can see from this slide, repairs, insurance of machinery, plant and furniture is dealt with by Section 31. Building is dealt with by Section 30 of the Income Tax Act. So what are the expenditures allowed in Section 31? Current repairs, insurance expenditures are allowed. So incurred in respect of what? Plant and machinery and furniture. So what are the conditions to be satisfied? So the plant and machinery or furniture must be used for the purpose of business or profession. So what if you use the machinery partly for business and partly for your personal purposes? Section 38 will step in. Section 38 specifically provides, if you are partly using for your business and partly for personal purposes, the amount attributed to the personal purposes can be disallowed. So again, for the reasons which I have already mentioned, section 31 is also not as important. So as you can see, current repairs means expenditure on buildings, machinery, plant or furniture for the purpose of preserving or maintaining an already existing asset which you have to do on a timed basis. So if you accumulate and do it, you can't claim under this section, but still you are entitled to claim under section 37(1). Now let's move on to the next section in our discussion today. A very important section, 36(1)(3). Now what is section 36(1)(3)? So 36(1)(3) basically deals with interest on capital borrowed. As you can find, this interest on capital borrowed is allowed as reduction in house property under section 24B, under business under 36(1)(3), for income from other sources it's available again under section 57. So each head of income except salaries allow the reduction for the interest on capital borrowed. Now as far as house property is concerned, you should take the loan for the purpose of purchase, construction or repairs and renewals of the property. So when it comes to equation of business income, when you can claim reduction under 36(1)(3), the first condition, the interest is payable by the assessee, obviously, otherwise the equation of applying the section is not there. The second condition, the interest must be on capital borrowed, and third is the most important one, the capital borrowed is for the purpose of business or profession. So what is actually creating controversy and why the section 36(1)(3) is very important is primarily because of the condition number 3. The capital borrowed is for the purpose of business or profession. So this is where the assessee and the department are basically fighting on this issue, where the assessee feels he has borrowed for the purpose of business or profession, whereas the department feels the capital is not borrowed for the purpose of business or profession. So when you go through the conditions, it's pretty obvious for you. The controversy surrounds on the point, so whether the capital is borrowed for the purpose of business or profession. So typically we'll try to take few issues which is of dispute between the assessee and the department. Assessee borrows capital and use it for payment of income tax. Now he thinks that the capital borrowed for income tax should be for the purpose of business or profession. So whether that can be claimed, it's a very consistent question in the examination. So what if I take a loan and use it for the purpose of payment of dividends? Can I say it is for the purpose of business or profession? Third issue, whether interest on capital borrowed be disallowed on the grounds funds are given to sister concern or subsidiary companies. So another very important issue, frequent issue both in examination and real life. Then we'll move to the last issue. What if I take a loan for the purpose of acquiring a fixed asset like a plant and machinery? Now considering you also have AS10, you also have AS16 which deals with borrowing cost. So there is going to be a bit of a conflict here. The accounting would like to recognize it differently. So can I do it differently when it comes to equation of tax? So let's take the first one, whether interest on capital borrowed for the purpose of payment of income tax be allowed as reduction. Have you in your articleship found the object of any company is to pay tax? The object of the company is to make profits. When you make profits, you pay tax. You earn salary income, you pay tax. You earn business income, you pay tax. You cannot say income tax itself is your purpose. So therefore, income tax even for a corporate assessee is only a personal obligation. Second point. So therefore, if you take a loan for the purpose of payment of income tax, advance tax, you cannot claim it as a reduction because that is not the purpose of business. Remember the three conditions: payable or the purpose of business or profession. So whether I can say income tax is my business, that's the question. Go to the second one, dividends. Somehow the courts have accepted the concept. If you take a loan for the purpose of payment of dividends, it will be allowed as reduction. Third one. So what if you take a loan for the purposes of giving it to your subsidiary? So let's look at the practical challenge here. So I am a profit making company, my subsidiary is a loss making company. If you are a lender, would you like to lend to a loss making company or would like to lend to a profit making company? The logic would demand that profit making company do not need funds, but we want to give only to them. Loss making company needs funds, but we don't want to give because the risk is more. So invariably what happens, the profit making company, the holding company raises money, then gives it to its subsidiary. So what is the income tax department saying? Was you should have taken loan for the purpose of business or profession. What is that you have done? You have taken a loan and given it to your subsidiary. So let's for a moment assume my subsidiary company, I am in the manufacture of cars. My subsidiary is in the manufacture of engine or manufacture of doors. What if the subsidiary company does not supply me the engine or does not supply me the car doors? Then you will have a funny car where there is a car without a doors, there is a car without an engine. Therefore, as a holding company, I have a deep interest in my subsidiary company. So therefore, if the subsidiary business collapses, I am going to collapse. Today the world is collapsed on account of COVID-19. Just imagine if subsidiaries. So now why the problem arises? China is the major source of supply for components across the world. When supply from there, components comes, all industries are crippled. Same thing will happen if my subsidiary is gone and is just supplying components, I am gone. So therefore, can we make an argument this can be claimed as deduction? So that we'll see in the next slide. The last one, if you take a loan for the purpose of acquiring the plant and machinery, what should I do? Because in accounting, till the asset is put to use, you have to capitalize. Whether it is the first machine or 10th machine or 100th machine, you can capitalize. But can I come back and say, when I buy a machine for expansion, it is only for the purpose of business or profession? So let's see the answer one by one with corresponding case laws. So first, already discussed income tax, wealth tax, personal obligations not allowed. Dividends allowed, case of Sugar Works, very interesting decision of the Bombay Court. They viewed payment of dividends as business activity and therefore can be claimed. But however, if you make a payment of dividend distribution tax, you cannot claim. The beautiful decision of Supreme Court SA Builders. Holding company has a deep interest in subsidiary, hence the holding company advances the borrowed money subsidiary, the same is used for the purpose of business, then it will be allowed as deduction. Very important, very interesting decision. And if you take a loan for the purpose of acquiring a capital asset, till the asset is put to use, even in taxation, it will be added to the actual cost. After the asset is put to use, you can claim it as deduction under 36(1)(3). So till the asset is put to use, actual cost. Thereafter, the interest can be claimed under 36(1)(3). Now, very importantly, there is an income computation disclosure standard deals with interest on capital borrowed. Maybe you can recall in accounting, to capitalize the asset must be a qualifying asset. A qualifying asset is one which takes substantial time before it will put to use. But in income tax, time limit for qualifying asset is given only for stock in trade. That means if you take a loan, say for a purchasing of a laptop, and the laptop is delivered after 1 month, that 1 month interest in income tax consequent to income computation disclosure standard requires to be only capitalized. So therefore that's a very important ICDS. While reading 36(1)(3), read it along with the income computation disclosure standard also. No difference in income tax between qualifying assets. All assets are qualifying assets. So therefore that's one precaution you have to take both in examination and in practice. So let's move on.